Today, people, we are speaking about 11 stocks that I went ahead and bought shares in yesterday. But before that, I just have to say, you guys are absolutely crazy. Yesterday, I uploaded this video, and this video is nearly on 10,000 views, over 500 likes. We went up nearly 300 subs in a day. For a channel of my size, this is absolutely mental stuff. If you go and search up Nat Stock right now, I am at the top of the table. We are above Jeremy from Financial Education. It's crazy. I don't know why this happened, but the support was absolutely insane, and I cannot thank you guys enough. It's amazing to me. It is so insanely motivating. I can't even describe it, man. Only a month or so ago, I was uploading videos and we were getting 200 views a video. And now consistently we're getting over 1,000 views. We have a video that hit 5,000, a video that's going to hit 10,000. The subs are growing so quickly. I couldn't do it without all of you guys. I appreciate you all so much. You don't even understand how happy I was last night. Just looking at the statistics, looking at the YouTube analytics and seeing the numbers that were being hit, you should have seen the smile plastered to my face all night. If you're not a part of the family yet, hit that red button, drop me a comment. I reply to absolutely everybody. I want to get to know you all. And of course, hit the button of like, help me out. All of those things help with the YouTube algorithm, and who knows, we could maybe have another video hit that 10,000 views soon. With all that out of the way, today we have 11 stocks to speak about. So I purchased 11 different stocks yesterday, 4 of which are completely new to my portfolio. I had no prior position in, and then obviously the other 7 I had already owned. And since it is so many stocks, obviously I'm not going to be going in depth on these guys. It's just going to be really quick so that this video isn't like a million years long. So thank you all so much for the support. I don't know if you understand how much it means to me, but it really does mean an awful lot. And with that being said, let's get straight into the video. Let's get straight into the first stock. I'm going to start off with the 4 companies that I didn't actually own beforehand, okay? So the very first one, you're looking at them. It is Google. It was only a matter of time before I finally got into these guys. You all know who they are, one of the biggest companies in the entire world. As a long-term investor, I had to get into these guys. On the screen right now is proof. Their share price is $1,346. I purchased 0.1 of a share because I'm not going to be dropping that much money on a share. That's not the size of my portfolio. But look at the max stock chart, okay? It is just simply put up and up and up. And I was trying to wait to see what was going to happen next with these guys. And I finally just decided that it doesn't matter. You know what? I'm going to be holding these guys for decades and decades. 40, 50 plus years more than likely. I just need to buy them. And look, we are still down a little bit from their previous peaks. So I'm not upset about getting into them at this price. I think anytime you can get into this company at any sort of a discount, it's going to be a good deal. A $920 billion market cap, an absolutely ginormous market cap, one of the biggest in the whole world. I don't need to spend much time speaking about Google. We all know why you would buy them. We all know who they are and what they do. I'm not going to drag this out. I bought Google, end of story. Company number 2, another big massive one, Microsoft. Another company that for some reason I decided I wasn't going to buy for the first while. I don't know why, but here we are anyway. So we can see that they're more or less back to where their peaks was, you know what I mean? And again, this is a company where very rarely are you going to get an opportunity to buy them as they have gone down. Obviously, you could have got it down here and got in at a really nice price, but I am still more than happy to get in here. This, just like Google, is a company that I plan on holding on to for decades and decades and decades. Dividend safety of 99, a dividend yield of 1.14%, a $1.36 trillion market cap. As far as I'm aware, this is actually the biggest market cap in the world as of this moment in time. I believe Apple is second and they're currently at 1.29 trillion. I could be wrong, but as far as I can see, they're the biggest market cap in the world. Even just looking at the 5-year chart, absolutely immense growth. 5 years ago, they were $48. The max chart, and again, it's just absolute growth. Obviously, there was a little dip here. Who cares, man? Look at what has happened historically. The last 20 years have been amazing. And in the last 5 years, this dip here was the only real dip that ever happened, and we're already back up more or less to where we were. The new Xbox is meant to be coming out late November this year. I spoke about these earlier on in the week, but overall it's just Microsoft. Again, they're so big that I don't need to explain or justify why I'm buying them. It's just as simple as they're one of the biggest companies in the whole world, one of the safest companies in the whole world. It's not like investing in Nat or in Delta or in Carnival, where like you have to make sure you get in at the right time, you have a plan. With Microsoft, I just click the buy button and I'm going to forget about them forever. Well, until I buy more of them. And the same is going to be said for our third company of the day, Facebook. So again, another company that for whatever reason I had never bought up until this moment of time, but I figured, you know what, it's finally time to just do it, finally get in on these guys. It was a relatively small position just because I ended up spending a lot more than I planned to yesterday. There was just a lot of stocks I wanted to increase my positions in and open positions in, but I'm in them now nonetheless. And again, just looking at the max chart, there is an awful lot of growth and there's an awful lot of potential. Their Q1 earnings came out there March 31st and it's, you know, it's fantastic. The stock obviously responded very well once these Q1 earnings came out. It's giving people a lot of confidence and I don't see any reason for these guys to go back down. I expect it to only be a stronger Q2, Q3 and Q4. Not much needs to be said yet again. It's just one of the biggest companies in the entire world. It was about time I opened a position in them. Now, company number 4, the last company of today that I opened a brand new position in. So the last company is JP Morgan. I only bought 1 share. So again, quite a small position, but I did buy a lot of stocks yesterday. So there is quite a lot of, you know, little bits and pieces today. I spoke about these guys recently as well, and what I like about them is that they're still down quite a bit from where they once were. Bank stocks are still doing terribly, to put it nicely, and these are actually my second bank stock that I have added to my portfolio. I'm currently in Wells Fargo, but I much prefer the look of these guys in the long term, so I'm going to be more inclined to add to my position in JPM before I do in Wells Fargo. 60 dividend safety score, 3.76% dividend yield, and a 10-year dividend streak. So you know what? That dividend most certainly is not the safest thing in the world, but they may well continue to keep paying it. They have come out and said that they hope to maintain their dividend. That word hope doesn't fill me with the most confidence in the whole world for obvious reasons, but if they do keep it up, it's a very nice dividend. And these guys, ever since coming out of the Great Recession, make sure to say recession, not depression, that was called out on my last video by an awful lot of people, but since the Great Recession, they've had some absolutely immense growth, you know what I mean? So when the economy is doing well, more than likely these guys are going to do well, and that is why I'm betting on them now. That is why I'm opening the position now, because I believe that when times get good again, these guys will perform well for me, and ultimately, hopefully, they can keep paying me that dividend as well. I don't like bank stocks, however, taking up an awful lot of my portfolio. It's just not for me, so I did open up a position, but I'm not going to be very aggressive with my, you know, spending, with my investing in these guys. That was the 4th brand new stock that I put into my portfolio. I now have 24 different companies in my portfolio. So, on to the companies that I just added to my positions in. Starting off with the boys, starting off with Delta Airlines. I purchased 2 shares in Delta. I've said it before, I do genuinely plan on buying these guys more or less every single week for the foreseeable future. Don't get me wrong, I 100% expect them to potentially go fairly lower over the next month or two, but that doesn't matter too much to me. In the long term, I believe in them and I believe there is some immense potential here. There was a stage where there was an awful lot of worry surrounding these guys, you know, there was this awful mist surrounding Delta Airlines. People were wondering, could they go bankrupt? Then the Q1 earnings came out. The stimulus package from the US government came out. A lot of promising things came out, which have made me an awful lot more confident in Delta going forwards. In the Q1 earnings, it's not actually the earnings that I'm worried about. It's the expenses and the money that they're bringing in and how much of their operating costs they were able to cut. So they've brought their operating costs down by 50% starting sometime this month. So far, they've received 2.7 billion of the 5.4 billion that's expected over the next few months from the stimulus package. Sometime this month, their operating expenses are going to go from about 100 million a day all the way down to 50 million a day. Pair that with the amount of money that they've gotten in, they're going to be absolutely fine. The way I look at Delta, okay, is they have immense short-term potential. The same short-term potential as guys like, you know, not even as guys like Carnival, but they also have immense long-term potential. That's why these are one of the higher risk companies that I've decided to invest in, because I don't plan on selling them if they go up, you know, 100%. I plan on holding these guys. Historically, they've also paid quite a nice dividend. Obviously, they had to cut it because of what's going on right now. But if I'm to hold these guys forever, make hundreds and hundreds of percents, and get a nice dividend, that to me sounds a lot better than buying a company, planning to hold them for a month to make 30% and getting out. You know me, I'm a long-term dividend investor primarily. They're the companies I really like. And Delta, I have so much confidence in these guys now. Only a month and a half ago, even a month ago, they were still really scary and I didn't feel the most confident putting my money into them, but now I most definitely do. Now, the rest of the companies. Next up, we've one of my personal favorite companies in the entire world, right? Pepsi, okay? We're currently at $132 a share. The peak was at about $147 a share. I just think that these guys are amazing long term. Again, just have a look at that max stock chart. Doesn't get much better at all, does it? They're performing really well right now. Their Q1 earnings came out and they're fantastic. Pepsi's making an awful lot of money right now still. Simple to see why, you know what I mean? People are still going to buy their drinks, their snacks. They're stuck indoors all day long. The demand for these products hasn't really gone down. On top of that, they have a 93 dividend safety score, they have a dividend yield of 2.9%, and an uninterrupted dividend streak of 47 plus years, and they've been growing it quickly at an average of 10% per year for the last 20 years. So that dividend right now is at 2.9%, which is a little bit under what I like to see. I like 3.5 to 4% at least. But 2.9%, a company that's been growing it very quickly, at some stage of life, I definitely believe they will pay that dividend that I want. And on top of that, they are going to make a lot of money just through their share value alone. I don't think that Pepsi gets enough credit. I think they're absolutely incredible at what they do. They have the balance sheets, they have the investments, they have everything to back it up. They have that dividend, they have the dividend streak, they have this beautiful max stock chart. They're amazing. And that's just why I went ahead and bought another half a share in these guys. They're a company like Johnson & Johnson, like Proctor & Gamble that I plan on buying and holding forever and ever. I also have a video comparing these guys to Coke and speaking a little bit about why I prefer Pepsi as a company. If you want to check that out, I'll have it in the description below. Now, on the topic of stocks that we're going to buy and hold forever, Procter & Gamble, another one that you more than likely all know of. The large majority of you, if you're a long-term investor at the very least, you probably own some of these guys. And again, I just went and bought another half a share in these guys. It's another company, just having a look at the max stock chart, it's been beautiful. Especially these last few years, they have made serious gains. A dividend safety of 99, a dividend yield of pretty much 2.7%, and a dividend growth streak of 62 plus years. And again, 8% per year dividend growth. That's very nice to see. And they're not going to struggle similarly to Pepsi in times like these because they sell products that people are going to buy regardless. Tide Pods, Ariel, Pampers, Lady products, Bounty, male products, Charmin, Fairy, Oral-B toothbrushes. These aren't the things that you cut when the economy gets tough. These are the things that you need and you will buy on a weekly or monthly basis for your house. Now, I will say that I don't think the price they're at right now is necessarily the best entry point in the whole world, but from a long-term point of view, it's all really fine. When we're playing the long-term game, we don't have to be too greedy. If you're a massive value investor, this might not look like the best play in the world for you. It would have been a lot more attractive down here, you know, at the $97 mark. I'm happy. Now, we have the buys. We have McDonald's, a company who obviously will have been hit fairly hard because of the virus that's going around, because they've simply put had to close an awful lot of their stores. Where I'm at, in Ireland, every single McDonald's in the country is shut down as of right now. That means that not one McDonald's in this country is bringing in any kind of money. Ireland is obviously a very small part of McDonald's when you compare to, you know, how many they would have in America or China or things along those lines. But it just goes to show the severity that McDonald's are going through right now. And even though they're going through such a tough time, you know what I mean, their stock price doesn't necessarily reflect that. We're currently sitting at $187. They were up around the $217 mark. You know, it's been a very good recovery. And again, it's a company, when you just go over to the max stock chart, it's one of those no-brainers. You don't have to be a genius to figure out that this is more than likely quite a nice long-term investment. And what a lot of people don't think about when they think about McDonald's, you just think about the restaurants, you know, but it's also the land, the real estate that all of those restaurants are on. McDonald's owns all of that, so the more stores they're opening, the more real estate they're getting as well. A dividend safety of 77, a dividend yield of 2.67. The dividend remains a paramount priority. I definitely don't expect them to have to cut this whatsoever because they have that uninterrupted dividend streak of 45 plus years. They're the biggest of the big boys in the fast chain world. They are going to want to keep paying this dividend. They're going to do everything they can to keep paying it. And just look at this again, 17% average year-on-year growth for this dividend. Absolutely beautiful stuff. We're already up at 2.67%. There is definitely a world where that gets up to 3.5-4% in the next, 5 to 10 years. And again, this is a company I bought not because, any specific news or anything like that. It's just one of those ones that from a long-term point of view, I don't think that you can go too wrong. And I just wanted to add to my position. Now, AT&T, a dividend safety of 65, an amazing dividend yield of 6.83%. And a dividend streak of 36 plus years. Obviously, they're growing that dividend slowly, but it's at nearly 7%. Of course, they're growing it slowly. And it's nice to see that only on the 24th, they said they expect to maintain healthy dividend coverage. So this dividend is quite safe as of right now. These guys are still down quite a bit from their highs of very close to $40. They're still down almost, 25-ish%. The last year for these guys was very good. It was the best year they've had in a while because look, the years prior to this, it wasn't the best. They were going down at quite a poor rate, but they were gaining a lot of momentum. So what that shows to me, what that makes me a little bit excited about, is that maybe when the economy opens back up, these guys will continue on that build of momentum. A lot of people are very skeptical about these guys. I completely understand it, but me personally, I love owning them, and I absolutely love that dividend that they pay. Coca-Cola, I literally only bought half a share. It was like 20 something euro. It wasn't a very big investment at all. I saw that I had 4.5 shares and I said, you know what, let's just make it a clean 5. But also, these guys are still down about 25% from their highs, as opposed to Pepsi, who are more or less back at their highs, so they might be a little bit, cheaper to get into right now. I know that earlier on I said that I personally do prefer Pepsi to Coca-Cola, but that doesn't mean that I can't invest in both. I still think Coca-Cola is an absolutely fantastic long-term investment. And two things that are a little bit nicer about Coca-Cola, especially from a dividend investor's point of view, they have a 3.57% dividend yield, an 80 dividend safety, which is a little bit lower, but a 58 plus year dividend streak. So they're paying a very nice dividend. They've been paying it for a very, very long time. And over the last 20 years, they've gained an average of 8% per year. So that dividend, that's a tasty dividend by any means. For a company as big as Coca-Cola to pay that dividend, absolutely fantastic. So although I do prefer Pepsi, and if I could only own one, it would be Pepsi. That's not the case. This is real life. I can own both of them, so I will own both of them. But again, it was a tiny investment. It was half a share. It was essentially nothing. I just wanted those 5 shares. I got on a bit of a spending spree. I didn't really plan on buying this much. It just happened. Okay, now we're having a look at EPD, a stock that maybe not all of you are familiar with. And they are doing absolutely horrifically. And I bought into them right about here. So they did absolutely terribly for me. There was a stage where I think I was down close to 30% in these guys. And right now I'm still down close to 20%. With all of that in mind, I still believe in them. So I went and I picked up another couple of shares. Again, it was a relatively small investment. It's a very cheap stock. A few things to note about these guys. 65 dividend safety. They're an MLP. Important to keep that in mind. A 10.14% dividend yield, and a 21-year growth streak, and it's been nice consistent growth. So if you don't know what these guys do, they're one of North America's largest midstream MLPs, with about 50,000 miles of natural gas liquids, crude oil, refined products, and petrochemical pipelines. The firm also owns a number of storage facilities, processing plants, and export terminals. So why I went ahead and just bought another couple of shares in these guys was they make most of its money from fees it charges their customers for transportation and storage. And we all know what's going on in the world right now. Yesterday's video about NAT, we were talking about oil all over the place, you know, there's no storage, blah blah blah. And we can see that EPD have actually had a really good month. Started off 1379, we got all the way up to 1836, now it's at 17, so it's been a very good month. But they did get hit really hard. Like, they went down about 60% or so from the peak. So why I'm buying more shares in these guys, okay, is because I do still believe in them. I really do still believe in them. So I want to get my cost base lower. That's what I really want to do, so that I can make money on these guys quicker. Because if I just left my initial investment in there, it was going to be a very long time before I even broke even. Whereas if I can get my cost bases down considerably, we could be in the money relatively soon. Now, with that being said, I don't want these guys taking up too much of my portfolio. I really don't. So I probably won't buy any more shares for a little while at the very least. There's places I think that I could spend my money better. But that is Enterprise Products Partners, and that is all 11 stocks that I went ahead and picked up yesterday. I did not plan on making such a big investment, but I didn't invest anything at all last week because I was so unsure of where the market was going. But I don't want to sit on the sidelines forever. I still have more than enough cash on the side to get into the market later. So I put in €742, which equates to $814. I know to an awful lot of people watching these videos, that's absolutely nothing. But to me, it is. It's an investment, and that's what we do on this channel. We invest, baby. And I am confident that that $814 will turn into thousands and thousands and thousands as the years go on. So I'm always happy to invest my money. So they are the 11 stocks that I went ahead and purchased yesterday. But please, as always, remember, use your own due diligence. Don't buy anything just because I do. I am not a financial advisor. I'm a 22-year-old. And as a lot of people pointed out in yesterday's video, I have an awful lot of alcohol behind me. So my opinion means nothing. No, but really, the support lately, guys, it's been mental. I know I say it every video, but it's just because it's mind-blowing. I can't even get it out of me. I don't know what to say. When I started making these videos, right, I was making a couple hundred views per video, you know, and I was so happy about it. Like, I'm not even just saying this for the sake of right now. I was so happy to have 100 viewers, to get 5 comments. It made my day. Now we're at a stage where, you know, yesterday's video has hundreds of comments, over 500 likes, nearly 10,000 viewers, and I'm still interacting with every single one of you. And now I'm getting paid to do it as well. It's like, I did not see this happening at this rate. Simply put, it would not be possible for me to do what I'm doing right now without you guys, especially you guys who are watching till the end. You guys are the best for the YouTube algorithm. So hopefully you did enjoy today's video. If you did, please remember, hit that sub button, hit that like button if you haven't yet, and drop me a comment with what stocks you bought this week, because I'm always loving speaking to you guys in the comments. And with all that being said, guys, I hope you all have a fantastic day, and I will speak to you all tomorrow in the next one. Peace.